In today's video, I'm going to take a look at a textbook example that occurred in today's market in NASDAQ futures. And again, how you're supposed to trigger an entry. So basically, this is on a 10-minute chart of NASDAQ. And the general pattern was higher highs and higher lows. So every time that we saw a pullback, I started running all of these prior declines within the uptrend from the new high to look for possible support on a pullback. So that is where we came up with this zone in NASDAQ. Let's see, the high end of this came in from anywhere from 118.22 to 31 area. That included symmetry and a 618 retracement of one of the prior swings. Now, the zone was tested, the zone held, and it did meet target number 1. Okay, so that's basically, textbook, what we're looking for, a minimum target of the 1272 extension. Now, this was a 90-point rally in the case of NASDAQ. Now, I don't expect you to get 90 points out of it, but I expect you to get something in the middle, and if you get that, you should be pretty much a happy camper. So let's look at triggers. So one of the triggers that a lot of my traders look at is on a 377 tick chart, because it's going to get you involved in the trade closer to where the definition of risk is. Okay, so here you can see this was actually the 834 EMA crossover. Once that crossed over and you also took out a prior swing high, that was your initial buy signal, and I think it came in somewhere around the 118.48 area. Okay, and that's using the 834. But if you do not have access to tick charts, one of the other things that you can do, which is going to give you a similar entry, is that you can use a 1-minute chart, and then instead of using the 834, use the 513. And actually in this case, it would have given you an entry, because we did have the crossover to the upside right over here, and then you also took out a prior swing high, so it would have given you an entry very similar to what I showed you on the 377 tick chart. So that's something else that you can look at. And again, just remember that once you get up into extensions where moves tend to terminate, it's really important to have a relatively tight stop. But that's again, that's how you make money with this work. It is setup. That's the setup on the 10-minute chart, plus trigger example on the 1-minute chart or the tick chart. And then you take the trade, and then you define your risk either underneath the low made prior to your buy trigger, or underneath the low end of the zone, which would have been, well, if you use this zone, it would be underneath the 118.22 area. Hope that helps.